the markets. Once again, at this time, we will be looking at what is going on as the treasuries, bills markets, the bond markets, trading is underway at the moment. I think it's open at 10 a.m. But let's now bring in a research analyst with AfriInvest, Mr. Robert Omotunde, as he joins us live to take a look at the market. Good morning, Mr. Omotunde. I would like us to begin by taking a look at the interbank market, where we are seeing, and as well as the treasury bills market, some kind of profit taking. Tell us more about what is going on at the market.
The income end of the market is a play out of two major events. You will recall that the equities market has been shedding some points for some time now because of the weak macroeconomic conditions, as well as weak earnings which companies have been declaring. These factors have generally made investors to switch to the fixed income end of the market. Another point is the liquidity in the system, which has remained at a very high level. And these two factors have been playing out at the interbank, as well as what we are seeing in the bonds market. For the interbank, you would notice that rates have been on a very low trend now. The OBB and the overnight rates are on the average of about 0.5% or 1% in some cases. And what is happening now is a clear-cut condition of what the market is seeing as we've seen enough liquidity, within the system. Bonds market, you see that yields have been on a declining trend. Of course, you may see one or two pockets of profit taking, like you highlighted, where we see marginal rises in yields. But generally, the condition of the equities market, has made investors to, see fixed income end of the market as an alternative.
Okay, the long end of the curve has continued to experience sell-offs, with yields expanding by 15 basis points on average. Why are investors averse to this end of the market? Talking about the treasury bills market now.
Well, for the treasury bills market, of course, if you analyze the yields across, you'll see that average yield is about 5%, or thereabout. It is expected because the long-run macroeconomic condition, is not too certain for the market. And when we see investors taking some form of cautious position as it relates to long-term, investment within the context of, money market trading for treasury bills now, it is indicative of the fact that investors are, they are much more comfortable with short-term instruments because of the, higher yields that the long-term instruments carry. But what is particularly worrying at this point in time is, even at the lower end of the yield curve, the yield is not, as attractive as, it used to be because of the bullish trend that the market has experienced. And this calls to question the fact that most of the investors in this segment of the market, particularly the banks, will find this period, very challenging, and may have to be looking at alternatives to putting their investable funds into use. So while investors are probably taking, some form of profit at the longer end of the treasury, the T-bills yield curve, is indicative of the fact that the short-term maturities are much more attractive than in terms of the lesser risk which they carry.
Could that be why we're seeing oversubscribed auction from the central bank through the debt management office?
The question of oversubscription is a clear-cut case of not so much of other alternatives that investors can, play in. You will recall that for consistently throughout the year, treasury bills auctions as well as bond auctions they've always been oversubscribed. And this is based on the fact that, a lot of investors are bidding for this small space, given that, there are no so much alternatives. The kind of depth and breadth that the Nigerian financial market requires is not, it's not there at the moment. So investors consider, the fixed income end of the market as, much more safer and as well they find it as an alternative to put most of their funds, and that's why we've been seeing oversubscription in recent times. Of course, for the bond market, is a regular occurrence, and even though the yield environment is lower now, and even when there's going to be another auction, that will be in December, another auction is not expected for the bond market in December. We should see another auction. The same case of oversubscription will still likely be recorded.
Now, what's your outlook for the day as we coast home to the weekend? What's your outlook for Thursday?
For the rest of the week, Thursday and Friday, which ends the week, our outlook is still neither there nor here. The reason is because what investors have been doing is practically what we can describe as bargain hunting. They want to see when the opportunities arise so that they take position and then they can quickly exit. Before we begin to see long-term investment position taken in Nigerian fixed income space, it is until there are clearer policies from the fiscal end, as well as until when we record some form of stability within the monetary policy space. So for the rest of the week, we are more or less still conservative. Market will swing it either way.
Now, do we expect any policy pronouncements, perhaps from the financial market, to drive activities at the interbank, treasuries, and bond markets?
Interestingly, next week the MPC will be meeting. The Monetary Policy Committee of the CBN will be meeting to deliberate on the various macroeconomic situation in the country. It is interesting to know that while we have recorded some kind of respite in terms of economic growth, another issue to want to consider is the interest rate environment. But it is, in our view, we do not think that the committee is likely going to take any major action as it relates to the monetary policy rate. That's next week. And the reason is because the market has already corrected. The yield environment is more or less, average yield both on bonds and treasury bills, they are more or less trading at a yield that is lower than what the MPR is saying. So even if the committee decides to do anything on the policy rate, it will be majorly just I would say it will just be for the sake of the policy, not necessarily to change the dynamics of the market pricing itself. So what we would expect is any policy, any major trigger that will change the dynamics of the fixed income market from the outcome of the meeting would be policies relating to FX, which is majorly what investors have been pricing, particularly the foreign investors, before taking position in our own market. So in the near term, going by the body language of the CBN and what we have been hearing both from the monetary and the fiscal angle, we do not think that anything major will be done in the next monetary policy meeting. So the situation we have now might still persist.
All right, thank you so much, Mr. Robert Omotunde.